Hello traders, the title of the video is how to master Fibonacci extensions like a pro, part 2. Alright. In this second part, we will be talking about the second group of Fibonacci extensions that one must know. Alright, each Fibonacci extension group has a specific characteristics, alright. And as a Fibonacci trader, you want to understand exactly what is taking place when one is dealing with a Fibonacci extension. In the first part of this series of video, I was talking about the first group of Fibonacci extension, talking about 138.2, 238.2, and 338.2% Fibonacci extension level. So what I was saying to trader in part 1, if the price goes down from A to B, like here, alright, the 138.2% in a downtrend, the first thing that will come into our mind is what? A support level. You see that the price did acknowledge that 138, I'm using 138.0 here, 138.2 as a support zone. So if the price breaks below that support level and convert it into resistance, we can sell it down. That's what's happening here. Break below, retest, the wick up, and then down. And the first thing that should come into our mind is that I'm not going to repeat myself. The second level that we must want is 238.2%. Here it is, you see here. First thing coming to our mind, support level in the downtrend. From here to here, it come down. That's the 238.2% level. So here, you break below that key level, you want to look what? Retest, break below, convert into resistance level. Break below, retest on a monthly chart. Let's show it down using the top-down trading method. The next level that we were talking about is the 338.2% in a downtrend. The first thing coming to our mind is support level. In an uptrend, the first thing coming to our mind is a resistance level. So check out part 1 so you may understand more what we were discussing there. So this is 338.2% for data price action there. Again, first thing coming to our mind, resistance, support level in the downtrend. See here, you see the tail. You allow you to set also profit targets and also to manage your trade and pinpoint reversal points. See, there were orders here to close trade, the price find support, orders to buy here. You see, that's the first reaction. This one came all the way here to 338.2, bounced back to 238.2% level, and then come back down, retest. People try to sell, went down a little bit, retest, they showed it again. You see, that's what we are talking about. And finally, it breaks above and found a support. 338.2. That's the first group. Now, in this tutorial, I want to talk about the second group of Fibonacci extension key level. What is the first characteristic of that second group is about breakout. So the first group, we are talking about support and resistance level, which I already mentioned. But the second group, the first thing that should come into your mind in an uptrend is breakout. In downtrend, bearish breakout or breakdown. Okay. So the second group is composed of 161.8. That's the level here. 261.8. Right there. That's for that move down. Okay. And the 361.8. Hopefully I can do it here. 361.8. Here it is. So those levels for the second group, one should think about. Okay, one should think about, all right, breakout. So bullish breakout will occur very often at 161.8% Fibonacci extension level. If you are a breakout trader, remember that bullish breakout very often will take place at 161.8% level, most of the time, and also at a 261.8% level, but more often at 161.8% level. Breakout can also occur in an uptrend around the 361.8% level. So if you are a breakout trader in an uptrend, the second group of Fibonacci extension, okay, you should learn to master it, right? Well, in a downtrend, we'll be looking for bearish breakout or breakdown, right, around 361.8% level. So here, supply going down to here. Here it is. It break below and retest 161.8% level. Look at that. You see, this one was quite messy, but this one was an orderly. Right? You see, it was messy here when we were talking about 138.2. Look what, break below gently. This one, top down trading method using the TST WSY usual A trader as a fully fledged swing trader. Down. All right. That's what we are talking about. Now look at the 261.8. Again, looking for breakout or bearish breakout in a downtrend. Again, bit messy. But those who understand candlestick C bar, if you were very patient, you were not kicked out using the top down trading method after this candlestick bar, you will gently enter here. This is a long candlestick bar. You can use those levels also for setting the target. You see here, this one drops from here, 261. You see, all right, this one also brings it to 261. All right, long candlestick bar. Those are essential key Fibonacci extension level that human beings that are trading are using, and also a lot of algorithms, all those kind of algorithmic trading system, they are using those key levels, and they group them. Okay, as I'm telling you, first group, second group. All right, it's all high frequency traders are using this on the 5-minute and 50-minute. It's going on all over the place, and the Fibonacci key extension level are essential key support and resistance level. All right, so here it is, 361.8. There was no breakout. You see here, he just whoa, then he quickly going back above it, as we said before. So if there is no breakdown, we will expect what? A reversal. All right? You understand? So normally, if the trend should continue, we should see bearish breakout at 161.8, 261.8, or 361.8. So, but if there is no breakout or bearish breakout, what should we expect? A reversal. So you need to understand that. So the reversal very often will also take place at 361.8% level. So the breakout, bullish breakout, bearish breakout are continuation pattern, yes or no? So probably going to continue. In an uptrend, we see bullish breakouts, either 161.8, 261.8, or 361.8. But if the continuation did not occur, we'll expect what? A reversal. Sometimes it takes some time with more experience. You will start understanding what's the price doing. So we are expecting a breakout. Now the breakout did not come. Who will come? The deputy will turn up, yes or no? All right? Just think of it like that, okay? All right? All right? So United States, they have the president and the vice president. So if the president should be there, and he cannot be there, he will send a vice, yes or no? So if we are expecting a breakout, all right, bullish breakout, and the bullish breakout did not occur, now we will think, okay, probably we'll see a reversal. Doesn't mean definitely there will be a reversal for the price action, but there is a high chance there will be a reversal. There it is, a reversal. Okay, so you may say to me, Joe, show me also in an uptrend. I don't want the video to be too long. So this is about the second group. Okay, I know that as I mentioned to traders, because I don't want to repeat myself too much, as you draw your Fibonacci extension, as we did now, try to go into the mind of other traders. Other traders may put it here. So they may have a different 161.8, 261.8, and 361.8. So once you select the one that is you like and you put it there, try to go into the mind of other traders. Like here, I'm putting it here now like this. Okay. Other traders may put it here. Okay, and they start working with that because the price is that it form a kind of double bottom here. So to reveal, I can put it here, but I prefer here. You see, so try to go into the mind of other traders. Okay, some traders say we can put it all the way to the tail. Okay, we can. Some trader will put it at the closing price. We talked about that already. So subscribe to Day Pro Trader and watch the videos about Fibonacci extension and how we draw them. So again, this is an uptrend. Price went up, you see, and then pull back here. Let's highlight this 161.8 right there. Okay, I'll delete this one. Okay, 161.8. We are talking about breakout. It breaks a buoy, we test it, you see here, but come back down, forming a double bottom below it. So be aware also about the bullish chart pattern that will occur at 161.8% level in an uptrend. So if you see a bullish chart pattern in those zones, 161.8 to 61.8, 361.8, okay, try to play them using a top-down trading method. So here it's a messy one. And then finally break a bull, retest gently here before going up. So be aware of those bullish chart patterns that usually occur in this zone. And play it safely, all right? Okay? Not bad, messy, but it's quite messy here. Now, next level, 261.8, here it is. That's where we are now. Again, you see here, this stock is doing the same thing. So it goes above it and come down. Here it went above it, come down. It's doing the same thing here. So you want to be very patient again here. Play safely again here. Will it continue? All right. Where is the price target? All right. And so on and so on. There's a gigantic. We are now at a cycle point for this stock. Okay. Return, so it went down and performed 180-degree turn. This is a cycle point, that's where we are now. Okay, so 261.8, the price acknowledging that level. There was a breakout, but again, you see, it came down here. All right. I don't want the video to be too long, so talking about how to master Fibonacci extension. Like a pro part 2, we were talking about the second group of Fibonacci extension, 161.8, 261.8, and the 361.8. The first thing that should come into our mind in an uptrend is bullish breakouts. All right. If the breakout do not occur, we expect what? A reversal. It doesn't mean that definitely we have a reversal, but that will be the first thing coming to our mind, and we will apply a top-down trading method to trade it. All right. In a downtrend, if for the second group of Fibonacci extensions key levels, we are talking about the same level, 161.8, 261.8, 361.8, but the first thing coming to our mind is a bearish breakout or breakdown. All right, if the breakdown did not occur, we are expecting a reversal. The reversal very often will occur at the 361.8% level, but the bullish breakout or the bearish breakout very often will occur at 161.8% level, more often than this 261.8% level. So the higher level we go in an uptrend, or the lowest level we go in the downtrend, okay, there is a high chance that we may see a reversal, talking about the 361.8% Fibonacci extension level. So there is one more video that I will be recording in this series of videos. That will be the last video, talking about the third group of Fibonacci extension key level, how to master Fibonacci extension like a pro. All right. If you have any question or suggestion, please put in the comment section, and in due course I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, mark it down. If you think this is an essential tutorial that can help other Fibonacci traders, feel free to share with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. We will be recording more amazing tutorials. All right. So stay tuned, subscribe today, and click on the notification bell. So anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the GSGW24 traders talking about how to master Fibonacci extensions like a pro, a part 2. See you in part 3 when I will be digging again into the Fibonacci extension trading tips and tricks that help. Happy trading to you all, and I will speak to you soon.